Welcome back, ladies and gentlemen. We have with us Mr. Jean Martineau, which is President and CEO of Dynacor Company. Mr. Martineau, good day.
Good day, Michel.
As Chris told us earlier, we won't have in this segment his comment, but he seems to be pretty interested by the business model of your company, because it's quite unusual. You do have the mill and without having the mines, and they usually have the mine before having the mill. So.
Well, we have started an operation in Peru in 1998, which is a custom milling operation. So because you have a lot of small producers, small companies in Peru, too small, in fact, to have their own mill, they produce and they sell the ore. So we began with this model in 1998 with a small mill of 50 tons per day. And from 98 to 2005, you know, that the gold price was pretty depressed. But since 2006, the price went up, and then we began to increase the mill production. So this operation permits us to produce, generate cash to pay for the exploration, because we are an exploration gold company. And as any exploration company, you know what's the process. You go to the market, you finance, you spend it. You need more money.
You dilute the company.
You dilute again, and it's what we wanted to avoid. So this way, we buy ore, we process it, we sell the gold, and with the profit, we pay for the exploration. So this is working very, very well for us, actually.
How many outstanding shares do you have in Dynacor?
We have 35 million shares. Fully diluted is just under 40 million shares.
Oh, yeah. So it's much less than the average exploration company, which is 200 million and so.
Well, the company was created was listed in October 2007. We created the company with 20 million shares. We distributed to the shareholders at the time, which was the name of the company was Malaga, and we distributed 16 million of these shares. And Malaga retained 4 million shares, and we did a financing at that time for 40 cents for 10 other million shares. So the company was listed with 30 million shares, and last year we did another financing at $1.05, and now we have 35.5 more or less, and fully diluted 39. So this model allows us to do our exploration without dilution. And if we want to go in the market to finance, it's when the conditions are good for us. If the price is too low, we just don't do that. A year and 15 months ago, the price was 25 cents. So we didn't want to dilute the company, so we didn't do any financing. When the price reached the $1.05, we did a financing in December because we had a debt with the mother company at the time. We paid it back, and now we have 35 million shares. We generated a pretty good cash flow, and we have like $2-3 million in cash actually in the bank. We have more than $6 million in value in stock there. We have all the cash we need to develop this model, to push the production, and to do the exploration.
Is it correct to say that in your case, the more the price of gold goes up, the more money you make?
Well, it's not a direct line, because when we buy the ore, the price is based on the international price. So if the price goes up, we pay more to buy the ore. But we retain a percentage of that, which is about, I would say, 20-25%. So every time it increases, we increase a little bit. But when the price was $300 or $400, we had to lower our margin at the minimum. So now when the gold price goes up substantially, we're in a position to increase that more than the average, let's say, 20-25%. So if the price goes up or down daily, it doesn't affect us very much, because the price we pay is more or less following the international price.
So you still have some expansion. You're now at 180 tons per day of raw material that you take the gold up, and you still have some room to expand.
Well, we're actually working at 180 tons per day. And before the end of this year, we're going to announce that we're going to increase again. We're going to be able to increase this production by another 10 to 15%. And at the beginning of next year, we're going to begin to build a new mill close to the national road, which is going to be much more accessible by truck. and we're going to be just linked to the national grid for electricity. It's going to lower our cost. And there we're going to increase the total production to somewhere between 250 and 300 tons per day. So by mid-2012, we should be somewhere there, 250 to 300 tons per day. And if the gold price stay where it is today, I think we're going to go quite fast to 300 tons per day because the local production is increasing too.
Mm-hmm. And the money you are making there, you use it to develop your new project. But it's not totally new project, but it's an ongoing project, which is closer to the sea.
The mill is closer to the sea. The project is high in the mountains.
Oh, okay.
If we refer to the Tumipampa, the mill is that's about 40 miles in direct line from the coast. The Tumipampa property, which is our main property, is between 42 and 4,800 meters in the Andes, and this is the major exploration property. We bought it in 2000. We have identified up to today 15 high-grade gold veins on the property. We have identified a skarn in 2006. So in 2006-07, we changed the focus from the veins.
What is exactly a skarn?
A skarn is a kind of a huge geological formation, usually polymetallic. So there, what we have, it's a copper-gold skarn, but we find in this skarn some other metals like nickels, and so it's polymetallic usually. But the two main metals in there are copper and gold. So we have identified, based on the surface sample we did, we have up to this, we can expect something like between 0.5 and 1% copper. On the surface, it's what we get. And with a gold grade, half a gram, 0.5, 0.6 grams per ton. And we're surrounded by 5 or 6 different huge skarns there, like the Las Chancas, owned by Southern Peru. On the west side, on the east side, you have Las Bambas, which is a 1.1 billion tons skarn copper-gold deposit owned by Xstrata. They're investing there $4.2 billion actually to develop this skarn. And we're surrounded by 4 or 5 of these skarns. So it seems that we have a same kind of skarn there. So it may be a huge mine there. And beside that, we have these gold veins. We had a few years ago 5 veins identified. Today we have 15 of these veins. And these veins we may try to develop these veins and begin a production with this maybe in the coming 2 years, doing a cross-cut there. So we have to evaluate in the coming months how we're going to manage that. But there is 3 types of deposit on this property. There is the skarn, which is a huge copper gold. This is something that's, if it's economic one day, it's going to need maybe $500 million or $1 billion in investment. These are huge projects. And on the southern part, we have these veins, which we can put them in production ourselves. We know how to run a mill. We have been in these operations for quite many years, and we can begin a small operation there and develop that. And beside that, there is another zone which are disseminated on the surface, a brecciate zone, and we haven't touched that today. So we have 3 different exploration target on the property. It's very, very interesting, and we're going to be there probably for many years from now.